2020 was a year unlike any other. There were countless headwinds and unprecedented challenges for investors, and even the most savvy investors found themselves at odds with the markets at certain points. As the year unfolded, interest in self-directed IRAs grew, and there were some key trends we saw driving investing momentum that we believe will support further interest in years to come. Let's take a moment to look back on the last year and the 4 key trends that emerged that impacted the world of self-directed IRAs. At the beginning of the year, the SECURE Act was signed into law, ushering in a new perspective on retirement savings. Many retirement savers benefited from some of its changes, including giving them more time to save by getting rid of the age limit that prevented individuals from contributing to their IRA after they turned 70 and a half. Savers can stay invested for longer, since the SECURE Act increased the age of which individuals can begin taking RMDs, or required minimum distributions. The SECURE Act also opened employer-sponsored plans to non-contract workers and provides small business incentives, among other benefits. The effects of the SECURE Act are empowering self-directed IRA investors to keep enjoying the benefits the vehicle has to offer. Our second trend emerged in March as the COVID-19 pandemic spread rapidly across the U.S. We reached historic levels of market volatility, and few investors were spared from the roller coaster ride of 2020. With the ongoing volatility caused by the pandemic, the U.S. presidential election, and social unrest, equity markets experienced major swings. Because of this uncertainty, many investors chose to diversify their assets away from traditional stocks and bonds and turned to strategies like alternative investments accessed through self-directed IRAs. Third, we witnessed ESG, or environmental, social, and corporate governance, become a major headline driver. Morningstar reported ESG assets doubled over the past 3 years and topped $250 billion in the U.S. in September. Particularly with the events of 2020, sophisticated investors looked for ways to invest in companies and causes they truly believed in. Investing through a self-directed IRA gives individuals a vehicle to make this a reality, allowing them to access more tangible investments that they couldn't invest in otherwise. And fourth, some investors decided to take matters into their own hands. Many savvy investors looked beyond a cookie-cutter approach to investing and developed strategies to pick and choose where they invested their hard-earned money. Self-directed IRAs are an option for investors looking to utilize their retirement savings to take control over their investment decisions. Individuals can invest in things like real estate, private equity, crowdfunding, and more, all through a self-directed IRA. With 2020 in the rearview mirror, what can investors expect to emerge in the alternative asset space 5 years from now? Alternative investments are expected to continue to dominate the news cycle. According to projections from Preqin, alternative assets under management are projected to grow in North America by 30% by the year 2025. In particular, global private debt assets are expected to grow significantly, with a compound annual growth rate of 11.4%. And private equity assets could surpass $9 trillion by 2025. Despite a challenging year, the outlook for alternative assets is bright into 2021 and beyond. If you're ready to explore the world of alternative investments for your investment strategy, visit us to learn more.